In this video, I'm going to be talking about investing after Trump has been elected president. I'm going to be talking both about how Trump's election will impact the overall market and the risk of that market, but I'm also going to be talking about how this will impact how you should think about your personal circumstances and how that in turn might educate your thinking about your investment portfolio. My name is Lars Kroyer. I'm a former hedge fund manager who has written a couple of books about finance, and I'm now doing these videos as a hobby. So it's an important premise to this video, and it's my view that as an individual investor, you're overwhelmingly unlikely to be able to beat the market yourself through active security selection or market timing, and you're also very unlikely to pick the 1 out of 10 investment funds that can do so over a 10-year period. I've made a couple of videos about this that I would encourage you to check out on my channel. Now, because Trump has been elected president doesn't mean that we all of a sudden have gotten this magical ability to outperform the market. So all the stuff we hear about Trump, like people saying he's going to be fantastic for markets or he's going to be terrible for markets, us as individual investors, we don't know better, and we should therefore assume that all the Trump information out there, what he may or may not do in the future, is already in the price of the market. So just because we couldn't beat the markets before doesn't mean that we all of a sudden can with Trump elected president. What we can do is we can reasonably expect markets to go up over the long term by 4 to 5% above inflation. That's based on several hundred years of equity market returns. But we can also expect that to be extremely volatile, from near lottery type returns where markets almost double or go up 50% a year to near bankruptcy type returns. That hasn't changed as a result of Trump. So if we can't outperform the markets post-Trump, what can we do? Well, we can think about how has Trump impacted the risk of the markets? Has the risk all of a sudden changed enough that we should consider the risk of our portfolio as a result of his presidency? Secondly, we can think about how Trump will impact individual sectors, individual companies, or individual geographies, and whether that impacts our life indirectly through our overall economic life, not just our investment portfolio, such that we should perhaps reconsider our investment portfolio and how that's set up. So what you have here is an estimated future risk of the US equity market. It's essentially a 6 months forward volatility index. It gives you an idea of how the market is expecting the risk to be in the future. There are lots of issues with this, including that the risk itself moves a lot, that it's only 6 months, that it doesn't capture fat tails, which is that unlikely events happen more than suggested by the normal distribution curve of the standard deviation. But have a look at the Chicago Board of Option Exchange where you can find this index. But in any case, what we have here is if you look at the x-axis, you have the time, so in this case from 2009 to present, and the y-axis you have the standard deviation. What you can see that in 2008, 2009, the risk was very, very high as the markets were going crazy. But what you also notice is that in more recent years, the risk has been much more constant. And in fact, it hasn't really changed a whole lot since Donald Trump was elected president. And that's perhaps surprising to a lot of us, considering how social media and the press has gone crazy, and you'd expect extremely high volatility as a result of some of his reactions. But the conclusion is that markets are not actually expected to be materially more risky after Trump. Of course, that can change very, very quickly, as we've seen in the past. But for now, the risk caused by the Trump presidency has actually not been that great. So if the overall market risk hasn't changed a great deal as a result of the Trump election, that doesn't mean your individual circumstances hasn't changed a great deal. It could be that you work in sectors, geographies, or companies that have been helped or hurt a great deal by Trump's election, and you should think about that in your overall portfolio. Let's, as an example, take that you work at mid-level management for BMW in a production facility somewhere in the US. You have your savings in BMW stock, your pension is guaranteed by BMW Corporation, and the house you live in is in the local town where BMW is the largest employer. Now, suppose Trump comes out with one of his 3M tweets saying, "Hate BMW, they're terrible cars. We don't want foreign companies making cars in the US. Get out of town." 8 a.m. he wakes up, he has his morning coffee, and he says, "I really meant it. Let's shut him down. They're a bunch of losers." Now, suppose people take it seriously and BMW's stock is down 50%. People are starting to call its creditworthiness into question. Your job is now in jeopardy. Your savings are down 50% in value. Your pension is all of a sudden looking dodgy because it's guaranteed by a company in trouble. But also your house is down in value because the biggest employer in town is in huge trouble. This is perhaps an extreme example, but clearly the election of Trump meant that your overall economic prospects have changed very, very materially. It could be good. In this case, it was terrible. So how do you know? Well, the election of Trump was a surprise. He was deemed 15 or so % likely to be elected the day before election. So you could look at how were the various sectors, geographies, and currencies you're exposed to, how did they change in value right after Trump was elected? That should give you a very good idea. But also think about it a little bit more holistically and think about what exposures do I have? Am I subject to a sudden shock? How can I avoid that risk? So while you don't know the overall direction of the equity markets, and you hopefully make sure that you have as broadly diverse an exposure to those markets as possible, your individual circumstances could have changed a great deal, and the risk you should take with your investment portfolio could also change a great deal as a result of that. Just to give you an idea what I mean when I talk about changing your portfolio risk, let's say you have in this chart the expected return on the y-axis and the risk on the x-axis. Let's say point A is an all-cash government bond portfolio, and point B is an all-equity portfolio, so a very risky portfolio. Let's say you've decided that point C used to be good for your purposes, so 75% equity and 25% government bonds. And now let's say that you decide, well, you really should lower your risk profile. So you might decide that I should really be moving to point D, which is a 50% government bond and 50% equity portfolio. I'd encourage you to perhaps consider a financial advice to help you think through these matters, not to help you beat the markets because you still don't think you can, but to think about your personal circumstances and how you should potentially change the gearing of your portfolio as a result of changes like the Donald Trump presidency clearly is. So I know it'll seem odd to some that despite a major event that people feel as strongly about, like Donald Trump being elected, and I'm telling you still can't beat the markets and you shouldn't try. I am telling you should think about the overall risk of the market, as you always should, and how that might impact your portfolio. And perhaps most importantly, you should consider your overall financial life and how that's been impacted by Trump's election, and how you should perhaps make some adjustments as a result of that. In any case, I hope this has been helpful. Thanks for watching. You can subscribe to my channel. You can share this video on social media if you think your friends benefit from watching it. But in any case, I look forward to seeing you in the next video.